financing costs, acquire and restructure industries, and strengthen operations to obtain rich profits. But in China, after a round of bull market noise and madness, PE has almost become an equity speculator. Generally, in the pre-IPO non-listed equity investment stage, it only takes 2 months to achieve over 100% net income. Therefore, as a synonym for money-making tool, like the portal websites that were established by both cats and dogs back then, both investment banking, consulting, and investment professionals rushed into this industry for a while, establishing PEs to attract investors. However, the dot-com bubble has burst and closed its position. The bull market feast will also end, and a large number of low-end, concept-only Chinese PE will also be evaporated. The relevant policies have only accelerated this process. Secondly, the misaligned timing of life has caused PE to turn from bull to bear before it has fully unfolded. Funding for VC and PE in mature countries, many of them come from professional investment institutions such as pension funds and education funds, as well as mature wealthy individuals. These NDS do not require short-term returns, but focus on long-term growth. Therefore, PE funds are truly idle and can be locked in for more than 7 years. In China, however, the capital client requires PE to move in and out as fast as the secondary market, to exit in 1 or 2 years. And to have returns beyond the industry. But what else can't they ask? It is precisely this cognitive mismatch in time and space that has led most local VDS and PEs to focus on investing in late-stage projects such as pre-IPO, falling into a vicious cycle of being too eager for quick success and instant benefits. Therefore, although the average size of domestic funds is still less than 1/5 of that of foreign funds, the projects covered are particularly large, not yet enough. But with the decline in the stock market since the second half of last year and the uncertainty of the exit channel, PE, the valuation of investments is rapidly decreasing. So, should companies still entrust money to PE? What is the prospect of PE investment? Actually, this requires we need to interpret it from a larger perspective, as PE is a typical representative of financial capital generated at a certain stage of economic and social development. Its fate is closely related to another major capital driving economic development, industrial capital. In essence, financial capital and industrial capital are simply intercepting different parts of the same interest chain, but they always try to nibble at each other's interest segments, forming a game. On the one hand, in the view of restrictions were imposed on foreign investment entering the service industry and resource metal industry. But the key to the problem is that financial innovation is emerging in endlessly, which cannot be blocked. Due to the above direct and indirect investments with the help of the international capital market and various financial innovation, such as the purchase of Chinese concept rights, real estate investment trust funds, large-scale subscription of shares of overseas listed Chinese enterprises, and overseas equity transactions or buyout equity acquisitions. Foreign mergers and acquisitions are still like fish in water. The Office of the China Real Estate Index System pointed out that the phenomenon of office building mergers and acquisitions in 2007 was not significantly affected by the external restrictions policy. In the first half of 2007 alone, foreign investment in Shanghai's real estate transactions amounted to nearly $1.3 billion, while in 2006, the overall foreign acquisition amount in Shanghai was $1.9 billion. Data from the Ministry of Commerce of China also shows that the actual of foreign investment used nationwide in 2007 $82.658 billion, a year-on-year increase of 13.8%. Moreover, if we continue to regard foreign investment as a scourge, the China concept will miss a major historical opportunity. When the American concept as a self-challenging advertisement, and a subconscious convergence of ideas about intentions, goals, and dreams, attracted tens of millions of immigrants, whose power and talent in turn promoted the development and success of the United States. Success is the achievement of the American dream. Now, the American concept is wavering. If China can create a Chinese dream like the United States when it created the American dream, that is, open up a main battlefield of you have me, which can not only meet the needs of the global surplus capital to seek a reasonable evaporation way, but also meet China's own industrial upgrading, management update and capital market improvement, such as the lifting of untraded shares bans faced by the stock market, the need for pressure such as refinancing. Finally, and more importantly, demonizing foreign investment implies a linear thinking.